Markets entered a pivotal stretch last week with inflation data, gold's breakout, corporate earnings shocks, and geopolitical risks all colliding. Let's start with inflation. The August Consumer Price Index came in mixed. Core CPI rose 0.3% month over month, while headline CPI rose 0.4%. That's not a collapse, but it was soft enough to keep the Federal Reserve on track to cut rates next week. Traders are already leaning toward multiple cuts through 2025. Reinforcing that view, the Producer Price Index, a key measure of wholesale costs, actually fell in August. Combine that with rising jobless claims, and markets quickly priced in more easing ahead. The softer inflation story drove gold to fresh records. Both nominal and inflation-adjusted highs were hit last week as investors bought into the idea of cheaper money. Gold's strength reflects both faith in Fed cuts and demand for a hedge against sticky price pressures and fiscal risks. In corporate news, Oracle was the shock of the week. The company missed headline expectations, but shares ripped higher after management unveiled guidance for Oracle Cloud Infrastructure at $18 billion this year, plus a staggering $455 billion backlog. That's up 359% year over year, driven by 4 massive AI build-out deals. The message was clear. Demand for AI data centers isn't slowing. Oracle's push also put the spotlight back on power, cooling, and grid capacity as the real bottlenecks for AI expansion. For now, fuel cells are bridging the gap, but nuclear power is increasingly in the conversation for long-term capacity. Globally, security risks flared in Europe. Poland scrambled jets, closed a regional airport, and raised air defenses after Russian drones neared or possibly entered NATO airspace. NATO quickly vowed to reinforce its eastern flank, and Washington reiterated its commitment to defend all NATO territory. Investors viewed this as a reminder that geopolitical shocks remain an ever-present wildcard, especially for defense and energy stocks. All of this sets the stage for the Fed's big decision this week. The FOMC meets Wednesday, and markets are expecting a quarter-point cut, the first since 2022. Powell's press conference will be the key. Traders are already pricing in 2 more cuts by year-end, with betting markets giving nearly a 50% chance of 3 in total. Turning to last week's performance, the S&P 500 gained 1.6%, its best week since early August. The Nasdaq added 2%, and the Dow rose 1.1% for its first weekly gain in 3. Tech and consumer discretionary led the way, with Tesla jumping 7.4% and Microsoft up 1.7% after avoiding an EU antitrust fine. Materials and healthcare lagged, but overall sentiment leaned risk on. Looking ahead, it's all about central banks. Beyond the Fed, the Bank of Canada is also expected to cut rates amid weak labor and income data. The Bank of England and Bank of Japan will deliver their decisions as well, while Brazil is expected to hold steady after a long tightening cycle. Want weekly recaps like this and a heads up on what could move markets next? Click the link below and subscribe to the Level Fields newsletter. It's fast, free, and built for investors who don't want to miss a beat.